Good evening, everyone. Welcome to our Financial Aid Night. This is the second year that we moved it earlier due to the changes in the financial aid filing process. I'm going to do a quick intro, and then I'm going to turn it over to our guest speaker. Just as I said with the college process, the financial aid process is survivable. It is one of the things, when we get into the applications, looking at college, financial aid for the students seems to be something they don't think about, especially in the beginning and maybe not even during. Many of the students I speak to consider it the parents' job to pay for the school and to deal with the very complicated and many times overwhelming process of thinking about funding. So my piece of advice would be that parents, helping your student, shepherd them through this process is going to be really important, helping them along the way, and to understand that as they're a burgeoning adult, that this is a piece of the conversation they need to be involved in. One of the significant impacts that they can have, especially here at Chappaq, is the local scholarships. At Chappaq, we have a very generous community in all the towns that are represented at Chappaq. And our students, if they're willing and sometimes pushed, can complete applications and often gain thousands of dollars of financial aid in scholarship form to help them go forward and continue their education. So that can really be a game changer. If you think of the difference of a couple $1,000s, which in a parent's mind seems like a lot, but in kids' minds, since you're paying for it, it doesn't matter at all. So keep that in the back of your mind. I will share one of the stories with my son, who was lucky enough to receive a renewable scholarship for $3,000. All he had to do was fill out the form that was mailed to him and me and return it to the scholarship committee, and he would then get the $3,000 again. And he's like, "Dad, it's not that big a deal. Well, why are you getting so excited about this?" I said to my son, $3,000 is what you make in the summer. That's how much money that you have after you work all summer long for 40 hours a week. Do you understand that concept? And he really didn't. So I think, for kids, the idea of $45,000 or $60,000 a year is so mind-numbing that it's hard to wrap their heads around it and to think about how they can break that up into manageable bites. And so this process is really important to make sure that we do go forward with all the steps along the way. So it's my pleasure to invite Julie Fino. Julie is from Sacred Heart. We've been having her for years. She's amazing. Every time that I hear her speak, I learn something new. Financial aid and dealing with and navigating the financial aid process is something that is ever changing. And so, it's great that you're here tonight. And if you're a junior parent or even a sophomore parent, hearing it again next year won't be bad for those of you that are repeat attendees. So I will put one more plug in for the cookies. They're in the back, and the water's there as well. And enjoy. There's a clicker here.
Okay, good. Good evening, everyone. It's a pleasure to be here. As I was driving along your beautiful country roads, coming up here, I was a little nervous after I was heading out of Fairfield today and hit so much traffic. I was hoping I would make it here on time. So thankfully I did, but I had the pleasure of driving your beautiful country roads and moving this presentation up now. I get to see it in the daylight. I used to see it in the dark. It was kind of creepy, not knowing where you're going. But it's a beautiful spot. You guys have a beautiful place here. You're a nice small group. So while I usually will defer questions to the end, I'm happy if I'm losing somebody or if I'm not making something clear, stop me, and I'll be happy to take questions as we go along. I will stop us from doing questions if I feel we're going to be here till midnight, because I'm sure we all want to get going. You've got some couple handouts there. Part of it's going to be this presentation, and the other one are two other pieces that I'll refer to that your guidance department that Todd and Mike put together for you. So let's get started. As Todd said, frankly, I I learn something every year. I'm learning something new all the time in financial aid. Things are changing for us each and every year. Of course, a lot of what we have is subject to federal government and state and whatnot and other institutions. So we change a lot. I've never been bored. I've been in this business for over 40 years now, and all the time at Sacred Heart, by the way. So I've spent my life there, and I love it. I wouldn't have, if I look back on it, I would say I wouldn't have changed a thing. So anyway, this is a fearful process. As already been said, it's a difficult one. Has anybody been through it before? Okay, so a couple of you have had the experience of it. I hope not a terrible one. But, the students right now, the scariest thing for them is, what college am I going to go into? Which one am I going to choose to apply to, and what am I going to receive? Do I need that? Okay. Oh, you're recording me? Oh, jeez. Okay. All right. Didn't know that. Didn't know you're recording me. Okay, so the scariest part for them is, which college am I going to get into? Is it going to be the college of my choice? And of course, you're all sitting behind there and basically saying, how am I going to pay for it? There's a lot of myths and mystery behind financial aid. Hopefully, I'm going to give you a few ideas tonight that will kind of put you a little bit more at ease. I'm not going to say I'm taking the pain out of the process. That's absolutely not true. But at least we'll get through some of the real truths about the process. Oftentimes people think that it's absolutely going to only be the published price or the sticker price that you're going to pay for college. In actuality, what really is important is what the student will actually pay. It's going to be the net price. Regardless, and you'll see why. It's not always necessarily the sticker price. I'm not saying that some people may not see sticker price alone, but with all the other supplemental help there, most people really need to focus on what's going to be their individual net price. Only low-income families qualify for aid. The important part is understanding that need is dependent upon the cost, what that individual family has an ability to pay, and that is considered need. So it's going to vary all over the place. It's not just considered low income, but some higher income families are receiving it. And right now at our campus this past year, 99.7% of our entering freshmen got something, federal, state, institutional, or private. So everybody's getting something today, regardless of what their income is. Myth that, this is a big one, and this one's concerned me a lot over the last couple of years. If you look at the media, I hope there isn't anybody in here that's of that profession, the media, publications, and whatnot kind of give aid a bad rep, particularly the student loan industry. Now, I can't say that some students and families don't borrow inappropriately. They do. And we can't stop them from doing that. We have to allow them to be able to take their course. But really, the students that borrow $100,000 are really in the smaller percentage of our population. It's only 4% of our population that's borrowing that much. And most of those students are probably in advanced degrees. How many of you right now know that it's not just a 4-year proposition? You're probably looking at 5, 6, or 7 years. A couple. Right. It's starting to be more and more students are going for not just their undergraduate or bachelor's degree. They're looking at making sure they're in a pre-professional track and that they're going into some graduate school. So that's where we're starting to see those students have those. Those are the students who have the $100,000 worth of debt because they're pursuing advanced degrees. So tonight, hopefully, we're going to dispel some of the mystery behind the process. We're going to discuss basically, I'm going to speak to 3 of the 4 areas. We're going to talk about the sources and type of aid, because that's what you really want to know, what's out there. We're going to talk about an application process, which is critical to the whole thing. How we actually determine eligibility, what are some of the key components behind need analysis. And then I'm going to leave you with the presentation. There's more than 10 to 12 slides of information regarding tools, tips, and a few more thoughts about the whole financial aid process that I want you to just take home with you and think about. Okay, they'll apply to some and they won't apply to others. So anyway, I'm just going to leave you with those things. So who qualifies for financial aid? I've told you I've been in the business since for over 40 years. For as long as I've been doing financial aid presentations, I haven't been doing them all 40 years, but I have to say I've been doing financial aid presentations for almost 30 years or more. So since the very first thing, this slide, this kind of principles of financial aid hasn't changed. Parents and students are always going to be primarily responsible for financing education. What we try to do is we know that some sacrifice is going to be assumed. It's always been that way. Some decades, sacrifice has been more than others based on how people have been financing education. Financial aid is only an assessment of an evaluation of your economic strength. It really doesn't relate to what we believe is either your cash flow or what you have saved in the bank. All right, when we start looking at a family's ability to pay. So the family contribution is a standardized calculation. It's not perfect. Believe me, there are things in there I like and there's things I don't like. But it tries to assess ability to pay. All right, tries to treat everybody equitably, kind of using the same concepts across the board for most families. What it doesn't assess is later on, once you know what this ability to pay is, what's the family's, both the students and the parents' willingness to pay that amount, okay? Or to the type of institution at that point, what do they really want to contribute at the level that we've calculated? So that's the hard part of the process. So financial aid is only supposed to be a supplement. It's not intended to replace the family's contribution. What we hope that it allows is that students always have access to higher education anywhere, whether it's a community college or whether it's going to be a 4-year or an advanced degree. At least they've got access to education, but they also have choice as to where they go. Okay. All right, so the sources and types of financial aid, the things you're going to want to focus on are the free aid, the gift aid, the grants and the scholarships. Of course, scholarships oftentimes have some kind of attached renewal or criteria for, number one, receiving it up front, and then number two, for continuing to receive it year after year. Then there's work-study programs. You know what? I'm a product of work-study. I'm standing in front of you here because I ended up in the financial aid and going into a work-study job and never left. But work-study is great for our students. It's only going to help defer some of their educational expenses, like their things on their own, kind of like a little small weekly paycheck. But it's good to encourage them to do that, even if it's not the money that's more important to you, but it's the connectivity piece. Students get to be on work study for a couple hours a week that give them an opportunity to connect on the campus. They may not have otherwise had the opportunity, whether it's with faculty, staff, whether it's through athletics, through student life, through research labs and others. They can be resume builders, or they can just be a place where they meet other students. All right. So work study is always a big part of the process. Then there's federal Stafford loans. The federal loans come in two ways. Interest is paid by the government. It's considered a subsidized loan while the student is enrolled. Then the government will not pay the interest. They'll allow it to accrue, even though the student doesn't have to pay it. They can while they're enrolled. So anybody right now can borrow under the federal government program. So students can at least have that portion. Anybody, regardless of your income, regardless of a student's financial need. Okay? And then it's so very important to read your financial aid packages and understand what's free, what's earned, and what's repaid. I'm not going to spend much time on it because you have an excellent handout here that talks about understanding your financial aid package. Please make sure that you use this as a guide, okay, when you're going through the process. So I think that's a great piece that I think Todd, through his experience, yes? Oh. Oh, okay. what our students are able to borrow right now, it's based on the academic year in which they're enrolled. Okay? So if a student is enrolled going into their first year, you'll find that you're able to receive $3,500 of a subsidized loan if you demonstrate financial need. And then in addition to that, you can get another $2,000, all right? But that $2,000 is not subsidized by the government for anybody, regardless of your level of need. So you can take the combination up to $5,500 as a first-year student, understanding that the government will, if you have the financial need, will pay for the interest that's accruing on it while the student is in school. But yet that other $2,000 will accrue some interest while the student is in school. Right now the interest rates are very good. Gosh, I should have looked at them again today. They're in the 3% range, right? Yeah, I think they're around the 3% range right now. So the students are actually doing good. It's not a bad loan. It's a good way to go. So we usually recommend, that's kind of the student's skin in the game. If there's nothing else, that's at least their skin in the game, okay? Gives them that little bit of extra that's their responsibility. Once they hit their sophomore year into their second year, they can get $4,500 and then the additional $2,000. In their third year and in their fourth, junior and senior year, $5,500 of a subsidized loan if they qualify for that, and then again an additional $2,000. So those are the undergraduate limits. All right. So most students, if they just even take their undergraduate loans, they're leaving with just slightly over, $20,000. All right. So it's not bad. That's actually kind of a good level of debt at a minimum that a student could have. Okay. All right. Okay. So this is the amount of money, and I apologize. This is harder and harder to do, and it appears different on everybody's computer for whatever reason. But just to kind of go over what that is, the federal loans are 62. I didn't bring my chart with me. Are 62 million, and they're representing right now 31%. And if you look to the other side, the institutional grants, which is the brown section there, that's actually 20%. All right, so years ago, and this is for everybody, undergraduate and graduate, okay? When you're looking at federal loans, it's including student loans and parent loans, all right? So on all students, that portion of that pie was actually approaching over almost 60% about 5-6 years ago. So you can see it's coming down. Institutional grants are expanding. The state grants, which is the dark black one there, it's basically staying about the same. The state of Connecticut, thankfully, the governor approved a level funding of the governor's scholarship program from last year into this year, but we're still at risk of losing that here in Connecticut. So we're not as strong as some other states right now in providing direct grant assistance outside of the natural subsidy somebody gets by being a state resident attending UConn or Central or Southern or Western or any one of those institutions, okay? That's kind of what we consider that unfunded, you don't necessarily see it kind of aid. It's because you're getting a reduced tuition cost. So that's kind of where the states stand. There's still a good portion in those in the gray portion there to the side at about 10 o'clock. The private and employer grants, again, it's a reminder that even a lot of the websites that you have here for scholarship search, students are pretty successful in getting those. And that's why that portion of the pie has been increasing over the years. All right. We have a lot of foundations, we have a lot of corporations, we have a lot of civic organizations that continue to increase their support for students today. Your employers, for example, are another place to do that. Okay. There are veterans and military benefits, tax credits that most families have been able to receive over the years, particularly as incomes have kind of been in flux. So if you qualify for those, it's all by the IRS, it's all by tax code. So those families who will qualify for it, you will find out on your income tax. Okay. So the important things are you don't want to make any fatal mistakes. You want to stop right now and you want to evaluate the fact that, okay, aid is important to me. It does matter. It may mean the difference between one institution or another. So you don't want to miss any deadlines. All right, it's important, whether they're admissions deadlines or they're financial aid deadlines. Right now, they're kind of running simultaneously next to each other, I would think. We've been concerned about institutions trying to pick up their dates and make them a little closer. What we did was when the government changed to an October 1st application deadline versus January 1, people thought that all colleges and universities would change their application dates and their filing dates, their deadlines. Some institutions have picked them up a little bit, but the overall national average is if anybody changed them, they only changed them by a month or two. So we haven't seen any real significant changes in deadline dates. All right, yes.
So you're applying for financial aid for colleges that you haven't even been approved by yet?
Absolutely. You're applying for your financial assistance. You won't get an answer of your eligibility until you're accepted. But you can apply to, utilize the school codes as you're submitting your applications for admission or not, or even anticipating those. You can always do the financial aid applications. So an important thing for you to be doing now is understanding what institutions am I applying to, what are their deadlines, okay, admissions and financial aid. And then what are their applications, which is going to be in the next slide. And make sure on any of those you're not missing any information. Don't leave anything blank. Okay? All right, so here's the financial aid applications. Just take note that these are the most popular ones, all right? There's all different scenarios out there. So as you're checking your institution's websites right now, when you're applying to colleges and universities, and for the students in the room, the place you're going to find the best information right now, particularly for financial aid, because it changes so quickly, is on the websites. We don't put as much in print, in the glossy print, as we used to. We put some things in glossy print, but they're more generic than they have in the past because it changes so frequently. So make sure you go to their websites and you're collecting the information. You are going to find in all of their in all of the websites, you're going to find some kind of application information. And usually you're going to find a direct link to the websites that the applications exist. The free application for federal student aid, or the FAFSA, okay, there's a lot of terminology and there's a lot of jargon in financial aid. We kind of have a language of our own. So if I'm talking past these because I live with them every day, stop me if you're not familiar with some of them where you need a little bit more help. It's required for federal and state aid. All federal assistance is required to have this form, that almost all state aid will want the FAFSA, that free application for federal student aid. It's at the FAFSA.gov website. Please make sure you're always on the FAFSA, the .gov website, okay? Now, here's the CSS profile. That's from the College Board. It's the same people that do the SATs. For those of you who already have some college choices in mind, anybody know you've got to do a CSS profile? Boy, you're a shy group. Nobody has to do them. No private colleges in here. Okay, if you're applying to some private colleges and universities, those are going to be the ones that are going to want some of those forms. There's a little over 500 institutions that are looking to use the CSS profile application as an application for a review of their aid. Okay, it's at the css.collegeboard.org. So that's where you're going to find it. But also because of the internet and because institutions are pretty sophisticated in technology, they have their own applications. They have their own systems. They have their own forms. So you may find that an institution will have something very specific to themselves. So please, again, make sure you check their websites and their publications to make sure you know what forms they're going to require and what are the deadlines for those. You'll find that each school will have their own deadlines. Yes?
Quick parent homework tip for your kids. So before they go out this weekend, if they're looking to be applying soon, ask them to have checked each of their schools' application checklist and financial aid checklist. That's probably 5 to 10 minutes per school
Yeah.
hour to an hour commitment of their time. But if they are looking to apply anytime this fall or in the process, this is a really good track.
Yeah, it's good. Now, when you get all that information, and hopefully you're not looking at 10, 12, and 15 institutions, that you may be looking at about 6, you know? It's the nice one when you're only looking at 2, 3, or 4. But you get, list them all. Like Todd said, list them all, the criteria for each one of those institutions. Find the earliest deadline. The earliest deadline. If it happens to be if it has to be a February 15th deadline, which is pretty common. Most of us that have always used the CSS profile with an October 1st and a May 1st applicant reply date, February 15th has been a pretty common one. Some have been earlier in January, and some may have picked them up. So you may find some January 15th dates, maybe even a few January 1st. But submit them at least 2 weeks. Give yourself some time to get information back and to make sure it's gone to the right institutions and the information that you have is somewhat correct on those, or is absolutely correct on both of those forms or on any of the applications. All right. Okay, so this is a little bit about the federal student aid process. Yes?
Quick question about your deadlines.
Mm-hmm.
So if the student has a list of, let's say, 4 or 5 schools, and it knows of the list at the time of the earliest deadline, the school that has the earliest deadline, once that application is done, is it done for all the schools?
Yes, yes. Because, well, it'll be done for all the schools that you know of at that particular point in time that require it, both the CSS profile or the FAFSA. You have the opportunity later on, say, for example, the student changes their mind and they want to add something else later. You can always go back into either one of those forms and add an additional institution on there. You can also remove another institution. If you've kind of maxed out the lines, you can get up to 10 institutions onto a form. But yeah, that relieves you of the responsibility. So once you list those 10 institutions on there, it goes to each one of the 10 colleges and universities when you're finished. So then we get them on that end. You get your response. Yes?
So you only have to do it once?
You only have to do the form once. Okay, you do the form once. Yeah. Now this is the federal student aid process. This is the website that has all of the information regarding federal student aid. It's actually very, very good. When I first started in this profession, I was never a fan of any of the federal government information, but over the years, and particularly in the last decade, the federal government probably has the best and the most qualified information that we know of, besides someone like the College Board or others. But they have an excellent website, and it can be viewed in many different ways. It can be viewed student to student, like a peer-to-peer approach. It can be viewed from a parent's perspective. So there's a real good understanding about the federal student aid programs, about applying to college, about applying to the financial aid process overall. It's going to be the place in which your federal student aid report will exist for multiple years to come. And if you're anybody junior parents, got a few juniors, okay? There's a FAFSA forecaster there. You're not actually going to do the FAFSA, but it'll give you a taste of filling out the FAFSA. And it'll give you a result based on the kind of information that you're submitting as to what you might expect your family contribution to be as it's calculated. So I think this is a great place for you to start, okay? Gathering some information. Yes?
One question. Being a parent of a student that's graduated university, is it true that there's been a change with the FAFSA when a university is looking at the choices of the student and their award, that it doesn't see like the 4 or 5 schools and that award for each school? Is it no,
Well,
private now? Is it one? Like say you kind of look and say, oh, what is WestCon doing? This and that.
Right. Well, number one, we've never been able to see what the other colleges give, okay, ever. We've never been able to see what other colleges give, ever.
Or with their financial.
All we've ever been able to see is what other institutions a student has listed on their form, okay? If the student listed UConn, WestConn, Sacred Heart, Fairfield University, all on one application, we would have seen who the other 3 institutions the student supposedly was applying to or had an interest in. We can't see that any longer. Nobody can see that anymore. We only get the information of the one school. The state gets additional information, okay, of the state schools, but we don't see that anymore. Okay. Okay. The federal student aid, for those of you who already have done financial aid, you would have maybe had a PIN number. Okay, do you recall that, a PIN number? Does anybody already have a FAFSA ID that you might have used for another son or daughter? You do. Okay, so you have that. This gives you access to all your federal student aid information online in all the systems. It serves as your legal, signature, with it you're attesting to the information, the accuracy of that. It's also good if you're applying for loans. So it's going to be your signature to apply for the loans and the students. Okay? It replaces the old PIN number that we used for a long time, 1998 to 2015. So we stepped it up into 2015 into something that you can actually remember. It's set up like other banking and other secure websites. It's the student and at least one parent that needs a FAFSA ID to successfully get through the FAFSA process. Yes.
May not be directly related to this, but if the child is 17 when they're entering college, will they give them a student loan?
Oh, yes. Mm-hmm. Oh, yeah. And it doesn't matter. The students are going to get it because they're enrolled, regardless of their age. They don't have to be 18. Yes. Okay. So all the students who are applying need to get a FAFSA ID. Did everybody hear the questions? Because we're a small group, so we're good with that? Okay. So otherwise, I'll repeat. It's specific to each student. So if you have more than one in college, the parent's ID is good, but it's good for all your sons or daughters. Okay, so it's good for all of them. The students have to have their own. On this website, you're going to be able to create your ID. You can do that now. Okay, it's helpful for you. That's your parents' homework over the weekend. Okay, yours and the students. So students got a couple more things. They might have a few more things to do. But this is going to be your homework over the weekend, is to get your FAFSA IDs, so you'll be ready to roll. It's going to ask you for your personal identification information. It's very secure now, so you'll give the information there. Make sure when the students are setting up their FAFSA ID, they do not use their school IDs. Okay? They should be using another email address, email address. A lot of them are using their high school email addresses and then they won't be good after a while. So make sure they're using another alternate email address, or you use yours, a family one. Yes?
So I have student loans currently. Would that be the same PIN for the parent?
Yes, your FAFSA ID?
Yeah, for my own student loan.
Correct.
Okay.
Yes, you are the same person for your own loans and, yep. Mm-hmm. Yep. Students should not use their high school email address, must match information with Social Security Administration. Please make sure that the name is exactly the same as on the Social Security card. You don't use nicknames, you don't use anything. You've got to use the full name. So if you haven't looked at the Social Security card in a while, now's the time to look at it before you do it. Okay, so on all of the applications, it's got to be just the way it appears with Social Security. Okay, so here's a few more tips about the FAFSA itself. We don't want people getting caught in the pay for application form. There's a lot of them out there. I did a search on the FAFSA the other day, as I was preparing this application, and I wanted to make sure that all my links were correct and my email address, my web addresses were right. There are so many FAFSA.coms out there that charge you. Please make sure you're not in one of those. All right? If you are, they sell you a whole lot of information that they can do something for you. They can help you find additional information. And they're using the same information, that's open to everybody else for free on the form, so on the internet. And with the guidance that you can get both here through your guidance office and through the colleges and universities you're applying to, you don't need anybody else's help. Okay? Certainly you don't need to pay for it. The 1819, October 1 is going to be the magic date now. People can go out and start filling out their FAFSA. It supports federal methodology. It's a methodology created by Congress to determine the eligibility for federal and state funds. It's submitted each year, the students in school. So while you only have to submit one a year, okay, you got to do it every year, okay? And one for each student, not per family, okay? So if you've got multiple children in college, you've got to be able to do one for each student. And again, don't ever do anything that costs you any money in that form. It's going to look for this basic information. We're going to be for the academic year 18-19, which assume a lot of your senior students will be looking to apply for. We're going to be using 2016 income tax information that's already been filed with the federal government. We're going to suggest that you use the data retrieval tool, and I'll talk to that in a little bit. Divorced and separated parents, you're going to want to use the custodial parent. Okay, and there's some helpful hints on the FAFSA websites or the studentaid.ed.gov website as to who defines parent and who should actually be filling out the form. So if there's any question in your mind, you'll be able to get it from that studentaid.gov site. They're going to ask you for some checking, savings, account balances, and if you've got more than one in college, they will ask you for that so that the information does relate to, a family's ability to pay for two going to college versus one. Okay, you can always pay more if one's going to college out of your current income. If you've got two going to college, you said yours is a senior though.
That one graduated, but we have a sophomore.
Okay, so you'll be divided by two. Okay, all right. So this is a little bit about the federal data retrieval tool. It's a good tool. We recommend all families use it. It went through a little bit of a hiccup this past year where there was some security issues and some identity theft issues identified by the federal government. So they shut it down, all right? And we had to go back to some old-fashioned ways of families having to manually input their information. So in 17-18, and we still don't have it available for 17-18, nor will we through the end of the year. We're going to continue doing everything in this academic year manually and having to use a lot more income tax information, a lot more verification stuff than we would have anticipated having to do. But it's been fixed. It will be available by October 1 for the 18-19 application year for students. So what this actually does is it's going to allow the parents and the students to access their tax information that will fill in the FAFSA form directly from the IRS, okay? It's got a lot of benefits to that down the road. It is very secure right now. On the parent information side, you're going to be able to see some eligibility questions. All right. If you fit that criteria, you're going to be able to enter your FAFSA ID and then click going to the IRS. All right. So you're going to leave the FAFSA website and you're going to go to the IRS. And at the IRS website, they are then going to ask you a number of questions. Okay. They'll go through an authentication process as to who you are. They're going to ask you a series of questions of data items that would be available to you to populate the FAFSA. Once you say, okay, you are not going to see the information, okay? It's one of the security issues that has been provided on both sides. When they go to authenticate you and tell you what data fields, it's only going to be the data field itself. It'll say that to you. It's not going to be the item you've completed. So they will not, you will never see the AGI that you've completed. You'll know it because you should at least have the copy of your 2016 taxes next to you when you're doing this, kind of getting an understanding of what's being transferred. You won't see it, and they won't see it on the FAFSA side either. Okay, so once it transfers in and you say, yes, I accept, it transfers over. Once you get back into the FAFSA side, you will also not see the amounts printed in there. Don't get worried because it's going to say transferred from IRS. So if you are comfortable with the way your income tax was filed accurately, you should be comfortable knowing that the information in those fields is accurate as well.
So we won't see it like we did in the past.
Correct.
Verbatim from your taxes. It's actually quite
Right.
That's all gone.
That's all gone. You're going to see it says transferred from IRS. So when you see that transferred from IRS, that's just as good as having seen the numbers. But you see what was happening was with the identity theft, people were actually seeing other people's information, stealing the information, then they had to shut it down. So they shut it down and they put in all these new security items. We will see the information though on the university side, okay? So when you list your 10 colleges that you want to receive the information, when we get it back, we're actually going to see the actual number. The colleges will see the actual number. So that families are like, well, what if it was a mistake or what if it wasn't right? If it wasn't, or you think that something's not quite right in your analysis, you can come back to the college and the university and ask them to check it for you, okay, with your tax returns, all right? You're going to repeat it for the students. And this is basically the ones where it gets a little complicated and we don't actually, it's usually recommended that families have to do it manually for these criteria here. Okay, so what happens after you submit that FAFSA? I've already given you a few things already. If necessary, make corrections to the other items that you might see that you filled in manually, like the cash in the bank, or you might have put an extra zero so your 10 grand became 100 grand. Double check it. Whatever. Make sure you at least look at it and see the information there. It'll also tell you the ISER will have a lot of, and that's what we call it, the ISER, the Electronic Student Information Report. That's what it's called. You're going to see if it was selected for verification. Now, depending on your information, if you don't use the DRT, okay, the data retrieval tool with the IRS, and you filed a tax return, I can almost guarantee they will select you for verification, all right, if you don't use it, and you could have, okay? They will almost always select you for verification. That's not a pleasant process. It puts a lot more responsibility on a financial aid administrator. Don't get me wrong. I mean, we're happy to do it. We have to do it in order to give you the aid. But what it will end up doing is that it'll ask you to have to submit certain things for us to verify the information that we had on there. We were able to get a reprieve this past year because of the problem that they had with the data retrieval tool, that they allowed us to take signed tax returns like we had in years past, because otherwise they're selecting people and we have to use a tax transcript from the federal government. We can't actually use what you filed and what you signed and sent to them, okay? Or what you printed off the website and signed and said to us was correct. You actually have to go to the IRS, request a tax transcript. And for those people now that do not file taxes, because there's a question on there, well, I don't file taxes. If it's the parent, you got to go in now to the government and ask for a non-tax filer statement. Believe me, they have them. Okay, anybody work for the IRS? No? The IRS has all kinds of forms, I guess, out there now. So you can go into another website. If you don't file a tax return, we have to have the federal government and the IRS tell us, yes, they don't file a tax return. We don't have them and filing a tax return. Believe me, it's not a pleasant process. So again, that DRT can take a lot of pain out of the process if you use it, okay? If you are selected for verification and we have to say stop, all right, we're not sure. And it could just be because you've done a certain thing. You may not have done anything wrong. Your question, you may have answered everything accurately. It's just, it puts a stop on it. We also get verified for things that are a mismatch in Social Security, in INS, in the National Student Loan Database, in the draft registration. There used to be stuff on the Drug Administration, but that's actually a little softened on that side. We don't get that as much anymore. But there's a whole bunch of other federal systems that cross over this FAFSA process. Okay. Financial aid awards can be tentative. Institutions may give you an estimate of what you got. You still have to deliver them the paperwork before we process anything or disperse any aid. So they may allow you to update it later. Some institutions may not even give you an estimate until they've got all the paper in hand and can give you an answer, and it's their right to do that. So it'll be important if you get selected for verification and you find that comment on your student aid report that you will probably have to begin following up pretty quickly with the financial aid offices that are receiving the information. Okay? What if that 2016 information, it's almost now 2 years old, you're applying for the year 18-19. We're already almost through 17, we're getting through 17, and that was your 2016 information. So what if it's wrong, doesn't represent each one? You've got to contact the universities now. You almost have to do each one. If it's important to you as a freshman applying for aid for the first time as a first-year student, you're going to want to start contacting each one of those colleges and universities. Go to the ones that are your first choice first and see what they want, all right? Because you don't want to have to miss anything on their end to see what they'll do for you in doing an analysis of what your eligibility is. But you don't alter the FAFSA information on your own. And now you really can't, because you can't even see what's in there if the IRS data retrieval tool was used. So it's going to be up to the college and universities to collect documentation from you and then go in and make the judgment calls themselves as to how the information should be adjusted. You will find people are really good at it. You're not going to find they're as nice as me. I won't guarantee that at all the colleges and universities, or that my staff, my staff is instructed to be as nice as possible and always do a professional judgment or take that appeal and redo that need analysis for every single family that comes forward with it. And they do it with a smile on their face. That's one of the rules of the office. Although sometimes they'd like to pull their hair out, it's still part of the thing. This is the CSS profile. Again, I'm not going to go through it. There didn't seem to be a lot of people that had it. But this is just the alternate form. It's the most popular other form that colleges will use, and most private colleges will use it. It supports a different methodology. It's called institutional methodology. And while there's a generic part of the methodology, there's also supplemental questions that colleges use. So they tinker with it to their heart's content. Okay, to see how it fits at their institution. Institutions like Yale have their own complete, totally different way of looking at the need analysis, as does Harvard, as does Tufts or Dartmouth or, Middlebury or Union or a lot of those other institutions that are kind of doing their own kind of need analysis system that's pretty obscure and different from the federal government system. Okay. So that's really what it does. It does cost to submit the form, but again, it's not a lot, particularly if you're going to get money from that institution. Yes?
I suspect some of my daughter's schools will have this this year, but do you have to do the FAFSA as well?
Yes. You'll have to do both. You're going to do both, right? Because they won't be able to process her for federal student aid. Oftentimes, we'll do this, like we use the CSS profile. School's money.
That's it, not the federal and state.
No, we cannot use this to determine federal state eligibility. The federal and state eligibility only exists off the FAFSA. Oftentimes, the CSS profile, if it's used, like Sacred Heart, for example, we use the CSS profile, but we only use it for a student who's coming in for the first time. We don't make that student file it each and every year. We use it as a base year, we collect it as you come in as a freshman, and then we only ask you to do the FAFSA each and every year after that. Okay? Some colleges will ask you to do it every year, and some won't. So it'll all depend. You know, if you're going to Yale or Harvard and they're giving you a ton of money, they're going to ask you for it every year because they're going to do their own need analysis system based on a change of income from one year to the next. Okay? Was there another question? No? Okay. All right, determining eligibility. So this looks like a pretty simple formula, doesn't it? It's just a basic, you know, here's your cost of attendance minus an expected family contribution, and then here's your financial need. Pretty simple formula. What's complicated is the components of both. But between the cost of education, that's one, and then the federal EFC, because I'm not going to talk about an institutional EFC, but more so the federal from here on in, so that you'll understand that's kind of the common formula that we'll use to get there. So we're going to look first at the direct costs. The direct costs are the things you're going to want to focus on right now. You're going to want to look at what are the tuition and fees that are going to be charged by an institution. And then what's the room and board that's going to be charged for the resident student. Okay? I know you're way up here, but would anybody commute? Huh? To WestCon? UConn Waterbury. Okay. Okay. Okay, okay. Yep. It's doable. It's doable. And there are some good institutions out there, so those are some good ones. Obviously, that does save a little bit, and a lot of students are liking to do the commute, particularly for the first couple of years, so that particularly if they're in some pre-professional programs, so they'll save money on the back end because their investment will later be in their professional studies. So students are doing it a lot of different ways today. But those are the two things you want to focus on first. Those are the main components. That's what you're going to be billed on. You'll also have some other indirect costs, you know, that you're going to want to incur in order to make the experience a good one. Of course, the books and supplies, it all depends on what the student's studying. They can be anywhere from $300 a semester to $1,000 a semester, maybe even more, depending on the major that the student's in. And then there's other supplies. There's technology supplies that you would want if they wanted a computer or a printer or a tablet or an iPad or whatever. Students will use all kinds of things right now. Institutions will recommend them to you. So some colleges and universities will be different as to what they're going to want for your books and supplies. Transportation to and from, whether you're commuting or whether you're living far away, there's always some kind of transportation cost related. And then there's always the personal miscellaneous expenses that students we want to have. Again, that's the best part for them, you know, when they're focusing on, geez, I really need a little extra money for this, that, and the other thing. Did you ask them, gee, did you actually get that work-study job that they offered you? You know, now's a good time to go up and get it because it's going to take care of some of their miscellaneous expenses while they're in school. Okay? So the second part of the formula is going to be that expected family contribution. And we also say we use expected and estimated interchangeably in our language. But that EFC is, for me, has always been conceptually a capacity over time. It really doesn't relate to how much cash you have, and is not necessarily always going to be the same as the bill or the amount that you're going to have to pay. All right? Some people think, but once that's calculated, that's all I'm going to have to pay to college. That is not the case. Okay? All it is an index. It sets a kind of a point against the formula for which we're going to start awarding aid. That EFC is tied so strongly to all the federal government programs, whether it's the Pell Grant or whether it's the student loan eligibility, okay, and as well as even our state aid. Governor's scholarship programs here, or now it's called the Roberta Willis. I got to get that right. Got to get that right. The Roberta Willis Scholarship Program, that is tied to the result of the federal EFC, okay? How much you can actually receive in that program. Institutions may calculate that alternate one. I already talked about that, so I'm not going to go through there. And again, the EFCs are subject to school verification. We talked about how it could be verified. And then again, based on adjustments when the family has special circumstances or issues or concerns regarding the income used in the calculation. So these are the key elements that we're going to use in developing either both the federal methodology, EFC. You're going to see that there's some things in the funnel there, number in family, income, number in college. Those are kind of some key components that kind of get all added through with the other questions that we asked. We're going to use both the parents and the students' information for dependent students. The parents' income is the major determinant. That's what it's going to be. Again, it's the capacity over time. They're going to assess a little bit for savings. The majority of it is the pay-as-you-go, is the present, so that's going to be the majority of it. And then the future is going to be basically out of whatever assets the family has been able to pay and how old the parent is. They're closer to retirement, they're going to expect to save more of your assets. Okay, they're not going to ask you to liquidate as much of your assets, and maybe you have when you're older into retirement. Also, if you're a younger parent, you have longer time in order to help to repay some of that debt. So you can borrow on some of the parent loans. So it's the past, the savings, the present, which is the pay-as-you-go, your income, and then the future might be with some loans. Okay. Now the parents' assets. People think because I've got some assets, shame on me, I'm going to lose out all kinds of financial aid. Well, that really isn't true. That would eliminate probably almost every one of my families from getting any kind of financial assistance. Parents' assets are only range from about 2 to 6%, okay, of the liquid assets. So it's really only about 6 cents on the dollar, and the national average isn't even 6%. It's like 5.34 or something like that of the parent contribution nationally. All right, so that would be the most that they would ask you for as a parent. On the student side, because the student always has been considered in the principles of financial aid, the main beneficiary, that they are going to, if they have any assets or income in their name, they are going to expect a much larger contribution of those towards their educational expenses. Okay, it's just how it is, and it's usually at the high end of the 35%.
Is that considered like savings for college in the kid's name and like treehouse accounts and stuff like that?
Yeah, it would be any savings accounts, any 529s, any trusts that they might have, any of those things that are within their names. Usually if it's attached to a social security number of a student, it goes there. If it's something is attached to a parent's social security number, it goes in the parent side. That's kind of the rule of thumb.
So, for instance, I think my father has something in Sam's name, and I don't know anything about it, and he doesn't really talk about it. Like, would that just show up somewhere, like
Well,
if I was lying, or?
it may not, because even if he has something set aside, if he doesn't have it under his social security number and Sam isn't receiving interest on it or dividends from it each year to, for tax purposes, then it's probably not something that you would add into the student's asset side. Again, if you have 529 plans, what you really need to do is you need to look up your plan. You need to see under whose name it's in. Parent's name, it would go under parent assets. Student social security number, it should go there. And if it's in the grandparents, it doesn't go anywhere. So it all depends on how they're set up. Yeah, they will take it, and I'm glad you set it up. I think it's, you can't rely on this financial aid system to be able to provide you money, because you may not find that you're going to get it, but at least you got it somewhere. No, they're going to take only a portion of it. So even if it was in the student's name, it's 35%. And if you actually, according to their formula, took the equivalent of 35% out each and every year, and you never added another nickel into it, the student would have that 35% each and every year of like a declining balance of 35%. And then they would be left like with very little at the end, enough to probably buy a candy bar or maybe a notebook or they would end up with something left. And that's kind of the idea of the 35, 35, 35 a year. Yeah, with not adding something in. So, okay. In the federal methodology, they don't include your primary home, but if you have other real estate and investments and things of that nature, they will look at those. If you have a retirement account, 401k or an IRA, they will not look at the principal amount that you have set aside, okay? Whatever you've got invested in your fund, they're not going to look at that. But if you've actually made a contribution this year out of your income, even if it's mandatory by your employer, it will be added back as untaxed income, okay? So it'll kind of come back to you in the analysis overall, okay? And IM does a few things differently than FM, and I'm only just going to briefly say these things to you. While FM doesn't look at certain things like home equity, the institutional methodology would. So colleges and universities, that's why sometimes colleges and universities who use an institutional methodology, like a private institution, may end up with a family contribution that's less than what the federal government says. Okay? You can contribute less because they're not only mild, they might add in your home. They're going to actually take out money for emergencies. They're going to take out money for college savings if you have other children that'll be coming up into college over time. They'll take away from medical expenses. They're also going to do regional cost of living. Federal government doesn't really care. I mean, it's a standard allowance only for living. Family of 4 here in this area is going to be the same as the mid part and the west of the country, all the same. But we take into consider regional cost of living because we believe we know where it's more expensive to live, okay? So it is, tied to that. So there you will see some differences. I oftentimes say these things because if colleges and universities are asking you to fill out these forms, don't delay in filling them out because there's a reason why they want to do them. And some of them want to do it because they have money that they want to give you. Okay, but they may have their own criteria on which they want to award it. So please don't second guess anybody in the application process. Just at least fill it out and see what happens at least for the first year. Okay. Okay. So this is kind of like an eligibility thing. This is the quick down and dirty, kind of looking at if you're applying to multiple colleges and universities, what you might actually see. You're going to see a cost of education that's going to actually vary. It's going to be from your private institution, which is going to be at the high end, and that's really the national average of just tuition, fees, room and board. And then on the other side, the 27 is the in-state tuition for like UConn, tuition, fees, room and board. Okay, so you're looking at that. The federal government FAFSA will release for you a federal EFC, which will be the same no matter what college or university you go to. So if you were applying to Sacred Heart, it would be $10,000. If you were applying to UConn, it would be $10,000. What would be different is your level of financial need. At the private institution, there's obviously a need for more money than there is the need at a public institution. Okay, so you may be seeing 2 different kind of financial aid awards just based on your level of need in attending various types of institutions. Okay. So here we have where we talk about what the aid is out there. We talked about that chart in the very beginning where you saw that almost 20% of the aid was institutional aid, need-based and merit. It would be both in there. It's not just need-based. There are some institutions that strictly do things on need-based where they believe all their students, if they've been accepted, they're all basically like the same kind of quality. If you can get in, all we're going to do for you is need-based aid. And that's mostly your Ivy League institutions and your most competitive institutions who have very, very big endowments. Okay? That's really what you're going to see at those institutions. But everybody else, which is the majority, which is greater than the majority. It's like probably like 80% of the institutions across the country. are going to use a combination of the merit-based aid and the need-based aid. And merit could take a lot of different forms. The two traditional forms, obviously, are athletic and academic. But there's other things. There's things for community service or volunteerism. There's things for talents and skills, whether it's in art, whether it's in music, whether it's in dance, whether it's in leadership. You've got all kinds of other grant type programs for students. Students are oftentimes recognized for the passions that they have in their lives and that they've been pursuing and you've been paying to help develop for them all these years. They're oftentimes recognized for those at many institutions. So in your college search, you might want to look at some of those characteristics and see where there might be a better fit for you at one institution or another that may recognize those kinds of commitments and talents that those students already have made in their lives. So that's a big part of the aid for today. And it doesn't really matter based on need. So here we have our financial aid packages. So if we look to the very beginning of the slide where we said the basic principles that parents and students are primarily responsible for financing their education up to their ability, you're going to look at that EFC of $10,000 and we're going to say, to be equitable, we're going to believe that the first $10,000 is the family's responsibility. Then the loans come into play. We believe that most students, in an equity approach to all students, that we're going to say, you know what, we're going to want to give everybody a $5,500 loan limit as their next level of need being met, okay? So in some other colleges and universities like the public, if that was the 27 up there, you'd already have the 10, and then you would have a much lesser amount of grant assistance or work study that would end up meeting that amount of responsibility for a family. So at the private institution, the work study comes into play because we believe in that as it's a small part of the overall financing of education, but again, it's an equitable approach. Those two components together, loans and work study, are called self-help. Colleges believe that students should help themselves at least in some way. So that's usually what you might find in almost all your colleges and universities will have some kind of federal Stafford loan in there in the amounts of about $5,500 and maybe a work study offer if you demonstrate financial need. But again, make sure you understand what's in that work study offer. And if they gave you college grants totaling 28, who are they coming from? Federal, state institution, private? Is it an endowment? Does it have criteria attached to it? Do they have to maintain a certain GPA, for example? Do they have to continue to participate in some kind of activity or something to that extent? Now, we would all love to make sure that we can do everything for everybody, but we can't, okay? The needs out there are too high. Most colleges and universities aren't even coming close to meeting need 100%, as in that first presentation, that first can there would suggest. They just don't have the ability to do that. So what ends up happening is they say, no, we're not saying you don't need it. We just don't have it to give to you. And again, if you're late and you missed a deadline, they might have some money left for you later on, but you might only just get the leftovers. I mean, you may not even get that $13,000 if you hadn't been on time, okay? So it's another reason why you want to make sure that you meet the application deadlines. In this case, you'd have unmet need of $15,000. So really, if the student wanted to go to that institution, how much does the family have to come up with? What are we talking here? 10, 25. You're talking 25. Okay, so if that's your choice, even though the analysis says 10, you really have to come up with 25. That would be considered your family's share. Then we have, where we have this merit-based aid that plays such a big part of what we do today. Like I said, athletic, and students are all involved. I just saw a team getting off a bus out here, so we know that people are competing and they're doing really well, our young people. Sometimes I can't believe some of the resumes we see of students coming out of high school, what they're actually doing. They could be well recognized for that at some institutions. Now, if they're being recruited for athletics, I'm going to tell you right now, they don't care how much money you're making a student. If they want that student, they're going to make them an offer based on their talent or their skill, all right? So that could be $20,000. And then, everybody's looking for the scholar athlete. They're all looking for the scholar athlete. And in addition to that, they could get an academic. So really, what you have to pay for is only 7. You might have said you could pay 10, but you want 7. And of course, if this is one of the institutions that was not their top choice, geez, I really didn't like that visit. It was lousy. I didn't like the tour guide, The food was terrible in the dining hall, You're saying, are you sure? Don't you really like that other place? God, we really have to come up with only 7 there. Are you sure you can't make the sacrifice? No, I really don't like that institution. And you're like, but the other one's not even giving you enough. Yeah, well, they're giving you athletic, but it's only 5, out of the 13. And then they're not giving you enough. There's still a gap there, Where are we going to come up with the 25, And you're trying to convince them in every way under the sun, oh my gosh, what are we? So I feel for you parents at that point. I mean, we get it so much on our end later, the competitive offers, everybody looking at award letters. Okay, one got this award letter, one got that award letter, and here you're panic stricken, right? The student is like, it's not my first choice, but look at how much money they gave me. I have to take this into consideration. So how many families are coming to me all the time with different award letters and saying, oh my God, you're our first choice, but you have the worst financial aid package. I says, I know. It's just what we are. We've been that way for decades, That's been Sacred Heart. Unfortunately, we have more students with need than we have money to give them. So we never can come as close to some other institutions that they have. But that doesn't mean that you can't approach those other institutions in a very nice, pleasant way, ask if they'll review it. Some will say, no, sorry, what you see is what you get. Others will say, happily, please present me the award letter. Athletic scholarships? Yeah, we're Division I.
And what would be the percentage of students on campus that have athletic scholarships?
Student athletes? We have, rough estimate, right now on our population, well, I can tell you right now we have 475 of the 800 and something athletes that are getting athletic scholarships. So not all athletes get athletic scholarships. Our total population right now is 4,000. We're actually 5,002 of our undergraduate population. About 10%. About 10%. But we have 99.7% of our students getting money because almost everybody's getting some kind of academic scholarship based on their high school GPA, their grade point average or other. We also do a lot of merit-based aid based on students' life and activity as well as need-based aid. So a lot of students are getting a lot of stuff. We actually have more students getting participation aid, like say, for example, in the performing arts, community service, and others than we have athletes getting aid. A lot more. By a lot. By a lot. By hundreds. By hundreds.
That's a great example, and I think we do see that kind of
Yeah.
example every once in a while. I would probably average 1 in 30 of my students that have that kind of
Yeah.
athletic scholarship, but the merit-based and academic things, whether it be leadership, community service,
Right.
outstanding academics, is
Right.
far way beyond in terms of the offer.
Yeah. I think that's the way most colleges are starting to go now because none of us have enough. So the students will always be evaluated based on what they bring to the table, And there's other things like honors programs and things like that. I know UConn is big on the honors programs. Doesn't matter how much you earn or what your financial need is. UConn does very well for honor scholarships, to get into their honors college. So all colleges and universities do things differently. That's an important part of your search, to understand what they do. And all of a sudden, your second choice, which gave you a better application, but gave you a better award letter and recognized something about you, which actually then connects you to a whole nother community, connects the student to a whole nother community of students who have similar interests. Makes for a very good college experience and helps you financially. So that may mean your second choice college could very easily become a first choice. And for good reason. It may be a good fit. Maybe a good fit. You just hadn't thought about it until you saw the package. And then sometimes the best deal is not the best fit. And that's the struggle that you have. That's the struggle. Okay. So, what am I doing? I'm going backwards? Oh, geez, I got it turned around. Okay, Julie, get it right. Okay. All right, so what we're talking about here, I already mentioned, is really what you're looking at is what your family share is in the end. So, of all the different colleges and universities. How do you find that family share again? This is, this is a visual that shows that it comes from income again. The major component, the biggest part, is the present. Then there's the long term, pushing it off to the future a little bit, is the loan programs, and then a little bit from savings. And even though this visual is done like this, it's done intentionally with these percentages because this is kind of how families do it. You use a little bit out of savings. Even if you have a lot of savings, some parents, would rather keep their money in their investment accounts than take it out because some of the money is cheaper, okay? Even on some of the loan programs, provided you choose a good one, okay? Don't get involved in some of the ones that are higher. But income, a little bit, a portion of it from income, a portion of it from with loans, and then from savings. It's not quite an equal third, and a third, but it's kind of like around that kind of proportion. And that's what we ask you to think about, those three pieces in trying to come up with what you might owe that college or university. Okay, these are some of the other areas that you're going to want to look at. Again, don't forget to look at the outside scholarship piece. Don't forget to go through those. People should always save. I believe saving is so critically important no matter how much, because you don't want to rely on this financial aid system to basically say to you that they're going to give you everything that you need to make the choice for the student that is the right one. So always do whatever you can out of savings. Sign up for those monthly payment plans in order to do kind of your pay-as-you-go as you're present. It's only 10 months. And if those 10 months are too steep for you, because you know what? They're eating sushi while you're eating pasta, you have to basically say, okay, we got to draw the line somewhere. How much do you want me to stretch it? Then you go for some of the loan programs. And then look at the loan programs according to some of the ones that we think are the better ones to do. The federal government offers a parent loan for parents. Interest rate's a little steep for me right now. I'm kind of like really, like looking at that and saying, not necessarily the best offer, the best amount out there, but it's still good and it's the most flexible for people to get. The criteria in which to get it is probably the easiest. They don't look for the high credit scores, et cetera, the debt to income ratio. They don't look to those things. Then the Connecticut loan program, and I have a website for that, and I'll spend a little bit more time on that in a moment. Private alternative sources. And then oftentimes family members will try to help in some way. Maybe they've got the 529 plan or the savings plan that they can come up with a little bit of that. So some students don't have access to that, and then some students do. My son wants me to work until my grandchildren are going into college. I was like, Nick, he asked me that when my granddaughter was born, the first day at the hospital. She was only like 20 minutes old. And he says to me, Ma, how long are you going to work? I'm like, where did this come from? I'm like in La La Land, you know, I'm just so excited because I only had one son and I have this girl now. I'm like, oh my God, I have a girl. You know, it's a granddaughter, but I got a girl. I'm like, what the heck? And he's like, well, you know, I just want to make sure that you're still working and maybe even at Sacred Heart while Alyssa's in college. I says, Nick, I love my job. I want to work. I'm not crazy though. You know, I mean, what do we want me to work till I'm 80? You know, it's going by pretty quickly already though. She's in second grade. She's in second grade already now. I'm like, whoa, maybe I am going to be working by the time she's in college, the way crazy things go. But anyway, here's your extra parental stuff, you know, these intergenerational help and support for students that didn't necessarily exist before. And we're also starting to see an analysis coming up from what families are reporting to us as that families' equity in their homes start to become better and better because there's more equity than there might have been, you know, maybe a decade ago. And the interest rates are so good, you know, for home equities right now, that some people are going back to that. Therefore, that's another reason why I've been seeing the federal loans, you know, those other educational loans decreasing because parents are going out and using some home equity that they may not have wanted to use before. So those are kind of the things that we're seeing right now. And again, they change from day to day, depending on you know, what government decisions and state decisions are making and what family decisions are being made, okay? These are net price calculators. They exist. They're supposed to try to help you plan for maybe choosing some of those institutions that might be a better fit for you. Again, it's an early tool to use. We talk about it because the federal government makes us do it. I'm not so sure it's critical in the decision-making process, but I think it's a good guide for some families who maybe the affordability concept may be a real stretch, and they may not want their sons and daughters to actually access some other institutions that they think are maybe too far out of reach for them financially. You know, let's not get, you know, too far invested in that institution if they're not going to come up with something reasonable as an offer. Okay. Here's the state of Connecticut programs. No Connecticut resident should go without the information regarding their state. I think you already have the website already on your green sheet here, but I'm just repeating it for you again. And the important one on here is the Cheslow Loan Program. Right now it's, again, this year going to be 4.95% fixed rate of interest. It's a parent and student combined as co-borrowers for the loan program. It does look at debt to income ratio. You can borrow it if you're going to be attending a school in the state of Connecticut or if you're attending a school out of the state of Connecticut, okay? The students have longer to repay the loans. It's over a 12-year period of time. Parents are not necessarily released from the loan right now. We're working on that, trying to get a parental release if the students start making good on-time payments with it right now. Because the debt actually gets billed to the student after they graduate. Parents are only responsible for paying the interest while they're in school. I like the program because if you've got more than one child going to school and you want to be fair, you know, Johnny, who's the oldest, always thinks he should get it all. But Mary coming up from behind is like, hey, you can't take all mommy and daddy's money. You know, I want some too. So this is a good way to maybe kind of share, you know, across the family, your ability to contribute with them and say, you know, well, we'll take out X amount for each one of you. We'll pay the interest on it while you're in school, but you've got to take on that debt when you graduate, okay? It's something for you there. Okay, so I like this program. I would use it. I would use this over any of the other programs if I had to.
Okay, I just wanted to ask you a question. You were saying over 99% of students incoming at Sacred Heart receive
Yeah, it's like, yeah.
some sort of scholarship, monies, et cetera. Is that the same nationally?
No. No, it's not. A lot of institutions are doing that now. A lot of institutions, like they recognize, like Todd even said, they recognize things that they never recognized before, above and beyond need. But not all institutions do that. We realized that we had to try to be fair to all of our students because we can't meet need on everybody at a really high level. So this was our best equitable approach to distributing our money. And for us, it works, and for our families, it works. It's not all colleges and universities are like that.
That's sort of what I thought too.
Not all of them are like that. A lot of them are, though. More and more of them are. You'll find more and more.
So, just being in your industry, what is the long-term strategy here for colleges? The tuitions are going up, up, up.
If
The optics are terrible with the size of the endowments. I mean, what, is it going to top 100K in 10 years? I mean,
You know, I'll be on, you know, the cost, it's a struggle for institutions today because we're all trying to keep our costs as we have been over the last several years. You'll find that, I mean, with the pressure of everything externally with the government and whatnot, institutions are not increasing their costs more than 2, 3, or 4%, you know. But it's tough for us to maintain the quality of education and the expectations for families to what they want at their college campuses, the delivery they want, what they're looking for in making their choices, you know. How it is to deliver a program, the cost of us delivering a nursing program, for example, or a pre-med, or an engineering, or even the college business, or even in your communications and media studies, which are your top fields, even in the criminal justice. All of those things cost a ton of money to deliver. It's tough for universities to hold on to that. And then what do they compare us against? They compare us against the quality of our residential life programs, our student life programs, which, you know what, if you got a crappy dorm rooms, that turns the students right off, you know?
Parental driven too. I noticed with all the tours we did this summer, I mean, and we all know we get paired off with other parents, and the kids go off or whatever, and I was like, I want to quit working and go back to school. I mean, is it because
That's what I'm saying.
Imagine sushi. I'm like, okay, my phone's vibrating. Oh, my laundry's done, and it's great. I mean, back in the '80s, we had to pay for our laundry. I'm just
Right,
saying,
exactly,
they're not
exactly.
gonna want to leave school.
Oh,
It's like,
oh, and you know,
is that
we
part of it?
we have all kinds of things.
I
We're
love them living in a river or by the river, but I'm like, you can't be too perfect. You gotta do well and get out.
But see, that's what they expect. They want the whole thing. And you see, because we even have online, the demands for technology, you know, the labs that we have to put up, all of these things, you know, I mean, it's huge. I mean, you know, years ago they said, you know, people said to us when we were on, you know, because we came from a small commuter institution, you know, in the 1980s and built to where we are today. We're we're the top 10 fastest growing college in the nation right now. We're doing well. We're very conservative. We are very conservative. We've got excellent bond ratings and we're doing all kinds of things. But it's because we've been so conservative, but we're offering families what they want, you know, and what they need, frankly. Plus, they're earning their degrees and they're getting placed. We have a 98% placement rate, okay? So our students going out either have jobs or they're in their pre-professional track, every single one of them. So that's what you want. That's what we want. You want your return on investment. So unless you can show what your investing is and what that return is, students aren't going to come for your product.
Is that why you also see a lot more 5-year master?
Absolutely. That's why I asked you in the beginning. That's what they want. First of all, and that's what employers want. That's how students are competitive today. They're going out there. I mean, we're huge in the health sciences. We're huge in the health sciences. Health sciences are expensive to deliver. And our costs are lower than most institutions, again. When we look at when families come and compare our aid awards and they give me other aid packages, they may have more money. But when I'd say to them, okay, look at the bottom line, where's your better deal? It's at Sacred Heart. I may not have the biggest academic award, but because my tuition and my room and board doesn't start as high as somebody else. You know, I'll just use my colleagues, Fairfield U. Couldn't be, they're like $10,000 more than us. You know, there was times when we used to lose to them. We don't lose to them anymore. Students will come to us, go to them. For the academic experience, for the placement experience, for the student life experience. Because we don't just believe in the academics, we also believe in the student life piece. It's important for students to learn to live in the world today and to be able to change careers 2 or 3 times if they want to. You know, so there's a lot to be said for that. Not all colleges and universities are like that. Most colleges and universities are excellent, but the affordability issue isn't just on the parent side, it's also on the institution side. How do we do it and stay affordable? You know, it's tough. It's tough. It's a really fine balancing act. Really fine balancing act. Todd just asked me when we came in here, and a lot of people are saying, oh my God, you went and bought that GE headquarters. What campus could not have bought 66 acres of land and 2 humongous buildings and parking garages for $33 million? Who could not have done that? You had to do it. It was a no-brainer. We need the space anyway, so we can get out of our leases. You know, it's saving us money to go into that building. That was a smart move on Sacred Heart's part, but people wouldn't think that. They'd think, what are they doing? They're charging their students. But see, colleges and universities all have to think that way. We just got lucky. We got lucky with that. So now we can close down all of the leased buildings that we had where we were smooshed in. We can get out of all of our leases, and we're going to get into this other property. But and it's great for our students. They've got more room, more space. So a lot of good things are happening. This is not just, this isn't, so I expect all of your applications to Sacred Heart after tonight. And I'm going to make sure that admissions knows that I was the one up at Chapag. All of a sudden, they didn't know about Sacred Heart. Julie, where do we get all these admissions applications from? You know, but we're a friendly place, and the students love us, and we love them. You know, I mean, it's a good place. It's a good place to be. I hope you find that experience wherever you go, wherever you go. The rest of this is basically information that I'm leaving with you. I'm not going to discuss. I've already kind of spoke to it, but it's the kind of things I'm going to leave for you to chew on at night when you go home. Yeah.
You mentioned earlier about these people who want to have you pay them to help you get information.
Mm-hmm.
I know that I think out there with the scholarships, there's a lot of people, a lot of scams. Is there any advice you have for that?
Well, I was just kind of, did I have that on here? About the scams? There is a website. Did you have that website down, Todd, about the scholarship scams? I don't know if I actually have that one. I used to carry that around, but I'll be honest with you, there's not as many scams as there were years ago. There's been, the Federal Trade Commission and everything has locked those things down and removed them, you know, their predatory practices from what we have. That's why I said the government is great when it comes to this stuff, I think, on student aid. But these are some of the ones that are the best ones, okay? These are the ones where we find they're successful. You don't pay for them. Whenever you have to pay for a scholarship search, get out of it. Get out of it. You don't need to pay for anything right now. They're not going to give you anything that these other free sites are already going to give you. Okay? Some of them may require a FAFSA evaluation at some point because some of them still do look at need and others don't. These are some informations. Again, I'm more concerned about what loans people get involved in versus scholarship search. And I'd like you to use some of these things. How much should we borrow? And from whom should we borrow is a big decision to be made. Okay, you don't want to push yourself over the top. You don't want to go to that $25,000 college when you can only afford 10, and you know you can't sustain 25, 25, 25, and 25. You can't sustain, as a family, $100,000 worth of debt. It's better to say no up front, go to another college, university, than have to tell them after their second year, we can't get financing anymore. We can't get another loan. We can't afford it. So I always say the loan calculator piece is almost, something families should concentrate on if the affordability piece factors into it. So be careful on that. And again, these are just helpful hints. Questions to ask, not assume. They will pertain to some and not others. My final thoughts, and then the final myths and truths about aid as well. So I've asked, we've gone through our Q&A kind of throughout the night, but of course I'm willing to open it to any other questions that you might have. Yes.
One question on the outside scholarship slide. It says notify college when you win a scholarship.
Yeah.
So you're always supposed to, like, if someone's graduating at a graduation or something?
Well, the little, the $200 book award or something that's going to them, that they're getting the check in hand, I say you could pass by that one. They're asking for the outside scholarship. Say, for example, you get something at awards night. You get some little scholarships. You say, announce them. The smaller ones that the students get, we don't really care. If they're not made out into the school's name, and it's like a book award or it's a small recognition award like at an award ceremony, I say, I'm being recorded. Oh, can you shut the recording off? Okay. I would say you don't need to provide those. But if you're, like I'm in Newtown Scholarship Association. I do scholarships for Newtown residents, in that program. And we send them directly to the college and university. You have no way that you have to let them know that, because the check is going to go there.
And I think, Julie, a follow-up question to that that's come up from some parents is that some schools consider that and then take that loan or that scholarship and then reduce their aid.
Yeah.
Some schools do not. And so I
Yeah.
think each school's methodology is a little different. Really important to know up front, because if you get a $5,000 scholarship, you're hoping that that's going to reduce your overall costs, where the school sees it as reducing their overall costs.
Yeah.
And so it's really important to look at that up front.
And that you, it may. In some cases, it might. And the institutions that typically do that are the ones that are meeting need 100%, because they're at a certain point where they have to take it back. Most colleges will not take it back unless they're meeting need at a high rate, okay, and utilizing a lot of those grant dollars. Those are the ones that will typically take it back. But they should let you know up front that they're doing that. That's a policy that you could ask them about, particularly if you're chalking up some good awards, because we do. I mean, even through Newtown Scholarship, we give our students, some of them up to $6,500. They're nice awards. So hopefully you'll find some of those. Okay. Anything else? Yes.
So do you offer early action in your school?
Yeah, we do. Early action, early decision, both. We do both.
Here's the question. So you apply for early action. How does that work with negotiating later? You have to ask, like, you're going to accept a student, and
Yeah.
okay, we're going to take you at, say, 50,000, versus we don't have enough students at this point, so we're going to negotiate later. I don't know if that's
Well,
how it works.
in early action is different. You're really almost talking about where we take negotiation off the table is an early decision. That's contractual. That once you get accepted, get your financial aid award package, you're obligated to attend that institution. Okay? Now, early decision is kind of been downplayed over the years with this emergence of early action. Early action allows you to submit multiple applications and still negotiate your awards. You get your awards from multiple institutions, and you're just getting everything earlier. They're giving you an earlier decision on your admission, and you're getting an earlier decision on your aid simultaneously to go along with that, so you can make your decisions earlier. That's really what it's doing. Some students want to go into just a regular decision-making process, which is fine too, and they just get it on the regular, kind of rolling admissions, starting in March process. But early action really just steps it up a little bit. It doesn't take anything away from you. You can do anything you do in early action just earlier than you would in the regular process. Colleges and universities like to be able to have more of their students deposit out of early action, encouraging them, but you still have till May 1 to deposit. Okay? You still have May 1 to deposit, even in early action, correct? Yeah. You still have to May 1. So really what it's doing is they're giving you notification of everything earlier in early action. That institution is committing to make the decisions on those students earlier, okay, than they are on the other students. Because the other students who just go in regular will wait on them, okay, and give them decisions after we finish everything else. I will tell that oftentimes the aid doesn't matter whether you go into early decision, early action, or regular. Some people always think in early decision you'll get less because you absolutely want that institution, but that's not necessarily true either. Usually they'll give you a fair and adequate award because if you've made a commitment to them, they want to make a commitment to you. So sometimes I think that's gotten a bad rep on the financial aid side.
Sending us to go to your school. Right off the bat.
You got to go early decision, and we'll give you the same award as if you were going in early action or regular. It wouldn't matter. Not all colleges do that. You can't negotiate. You can't show us another offer from Fairfield University and ask us to compare to that. If you're in early action, you can, or if you're in early or regular decision, you can. But negotiation is taken off the table in early decision. Yeah. We have people that are applying early decision, but also with us, but applying early action to another institution and asking us to compare the awards out of their early action, and we basically say, I'm sorry, we're not even going to look at it. We're not going to look at it. Because early action can be giving you, because you can still have applications out there, but what you're supposed to be doing is if you get accepted in early decision, you're supposed to take the other stuff off the table. You're supposed to come if we accept you with that. So, we tell people if you take, I don't know how many people are doing early decision anymore with you guys.
We have very few.
Yeah.
Really, we really work hard with the student and family when they're making that decision to make sure that is the correct decision.
Right.
And that financially it's gonna fit, because there's been a couple of cases, even at Chicago, but nationally as well, but those students that get the package back and you don't have that middle. And
Right.
often the offer, the first round of the offer is not the same. There isn't always wiggle room at colleges. Colleges
Yeah.
sometimes make the best offer they can, and that's the one that sticks. Even if another school offers a better package, it doesn't
Right.
mean that the school's gonna come back and say, oh yeah, we can meet that. That isn't always the case. Doesn't mean you
Yeah.
can't ask the question, but some schools might relook at the package that they offered, look at the student again and say, yeah, we can come up another $5,000, and
Yeah.
make a big difference. Not every school can.
Yeah.
Early decision, takes that off the table. I think that's an important factor. With that said, a kid that wants to go to that university that makes sense for the family, that early decision commitment can make a difference.
Yeah, it can make a difference.
Give a great big round of applause to Julie. She did a nice job tonight. As you can see, a wealth of information, and I took some notes that I'll be making sure to get back out. Mike is passing out our program evaluation. As I said last time, it really is important to us that you give us those evaluations back, as we continue to try and improve and look at offering you the best programs out there. I applaud you for sticking through, taking all this information. It's a huge chunk, and you're well on your way to now becoming experts in the financial aid process, or at least have better information about it. Our office is happy to help with any of the questions that come up, and I know, Julie, you've offered in the past. I'm going to put you on the spot, but she's been great, and what I found with other parents is if they call financial aid offices and ask for some insights, we've used Central, Southern, our state schools as well, but any of your institutions, please find the financial aid officer there and ask them the questions that you have as you're going through that process. I know with our experience at my son's school, the financial aid officers were always forthright. They would tell us, what we need to do, and I found that was really important, especially over the years, going through the different steps that needed to be done. Sometimes encouraging my son to get out of his dorm and go sign the form, for example. So thanks again. There are some cookies and water. That's my last plug for those, I promise, if you want to take them for the trip home. All right. Thank you. Have a great night.